Hello traders, welcome back to the channel. In today's video, I'm breaking down one of the most powerful ICT concepts, the Midnight Open. This single level can reveal the entire intraday direction with stunning accuracy, and once you understand how to use it, you'll start seeing clean setups every day. The Midnight Open marks the start of the algorithm's daily delivery. From this point on, the market begins showing its true intention. And if you read it correctly, you can position yourself with precision instead of guessing. What makes this concept so powerful is its consistency. It repeats daily and helps you identify whether the market is offering discounted long opportunities or premium short setups. By the end of this video, you'll know exactly how to use the Midnight Open to frame your bias and catch high probability trades. Let's get into it. So first, let's understand what the midnight opening price actually means. It is the opening price of the trading day at exactly 12 a.m. New York time, EST, which corresponds to 10:30 a.m. in Indian Standard Time during EST. This level acts as a daily benchmark for identifying intraday directional bias. The midnight open is treated as the starting point of the algorithm's daily delivery, the moment when the market's program begins to unfold for the day. This concept is incredibly powerful and repeats every single day. If you truly learn how to use it, the Midnight Open can give you the direction of the entire trading day with remarkable consistency. First, let me explain how to mark the midnight opening price. The first thing you need to do is open your TradingView settings and enable the Chart Values option. Once you turn this on, a small box showing candle data will appear in the top left corner of your chart. Next, place your mouse cursor on the candle that opened exactly at 12 a.m. Eastern Time, which is 10:30 a.m. Indian Standard Time during EST. In the Chart Values box, look at the first value labeled O1. This stands for the open price. Simply mark that exact price level on your chart. That line becomes your midnight opening price. Now let's look at a few examples. First, we'll start with a bearish example. In this case, you can see that price first swept buy-side liquidity above the midnight opening price and then immediately delivered to the downside. This shows how the market grabs liquidity in premium before shifting bearish. Next, let's look at a bullish example. Here, price takes out sell-side liquidity below the midnight opening price and then moves strongly to the upside. This is the classic behavior of price collecting liquidity in discount before delivering higher. Now, let's hop onto the charts and go through these examples in real time. So, coming onto the charts, we have our 10:30 a.m. Indian time, which corresponds to the 12 a.m. Eastern time candle marked out. We will turn on our chart values, then check the opening price and mark it out. You can verify the price in the upper left corner. We also have a buy-side liquidity sweep along with a market structure shift. So we have all the confirmations. Buy-side liquidity sweep above the opening price and then a market structure shift, so we are safe to enter. So we will enter short, place our stop at the high, and target the sell-side liquidity. We got a quick and clean target. That works, right? Now let's look at what happens next. Now we have the same opening price because the day hasn't ended yet. The price swept our sell-side liquidity, and now we have this buy-side liquidity here. After the price sweeps our buy-side liquidity, we will wait for confirmations. Now we have an inverse fair value gap, so we will enter short at this gap, place our stop above the high, and target the sell-side liquidity. Once again, we got a clean target. Look at both of these trades. They are in a single day. Understand this concept and use any entry model, but if you just align this single concept, you will increase your odds of catching high probability moves. Now, moving forward, we have our 10:30 a.m. Indian time, which corresponds to the 12 a.m. Eastern Time candle here. So we will mark out the opening price. We also have a buy-side liquidity sweep above the opening price. We then have an inverse fair value gap, so we will mark this out and wait for price to retrace back into this gap. Once the price retraces back to our IFVG, we will enter short, place our stop at the high, and target the sell side liquidity. Price immediately displaced to the downside, came very close to our target, then moved sideways, but still eventually gave us our target. You can see that the market moved to the downside for the entire day. This is the kind of bias this one concept can give you if you use it correctly. So now, coming to our last example, we have our 10:30 a.m. Indian time, which corresponds to the 12 a.m. Eastern Time candle here. So we will mark out the opening price. We have buy-side liquidity, so we will wait for it to be swept. Once the market sweeps our buy-side liquidity, we will wait for this FVG to get inverted. Now we have an IFVG because price has invalidated this bullish FVG. We will enter short, place our stop at the high, and target the sell side liquidity. However, since we are not getting a good risk to reward ratio, we will drop down to the lower time frame and place our stop above this FVG instead. The market displaced to the downside, came back to our entry, but eventually gave us our target. Thanks for watching. If you want to dive deeper into these concepts and truly understand how price moves, make sure to join my Telegram and Discord community. I regularly share charts, breakdowns, trade ideas, and detailed explanations that will help you refine your approach and build real confidence in your trading. And if you're someone who wants direct, one-on-one guidance, you can reach out to me on Discord for mentorship. Whether you're struggling with bias, entries, liquidity concepts, or just need structured learning, mentorship will help you get clarity and speed up your progress. So join the community, stay connected, keep learning, and I'll see you in the next video.